Ewan, thank you so much for joining us today. So firstly, let's get your view on the success of Amcon and the role it's played in the banking sector and continues to play still in Nigeria.
Yes, thank you, Samantha. I mean, Amcon, it's a very interesting topic as the whole of Nigeria is. You know, when you start getting involved in the bailout of banks and all those type of things, clearly it's a very contentious issue. When we look at Amcon and the role it's played over the last 2-3 years, certainly I think the argument is strong that it has had a very positive influence on the banking system. One mustn't forget that 3 years ago, the Nigerian banking system was on the brink of collapse, and quite likely we would have seen bank failures. Since then, we know that no depositors have lost money, no creditors have lost money, and the cost to the Nigerian taxpayer has been limited. And at the end of all of this, the banks are in a far healthier position. So to answer your question, yes, I think Amcon has been good. In
terms of bonds that Amcon has issued, set to be around 3.89 billion naira. That's since 2010, when it was formed, zero coupon bonds. How has this money that has moved into the banking sector affected the ability of banks to then lend out that money? I mean, what type of asset growth and risk taking have we seen as a result of Amcon?
As you rightly say, I mean, the Amcon bonds are zero coupon. They sit on the balance sheet for various periods of time, so the bank can't really use that to lend. What we have seen is, because of the improved asset quality, they have started to grow their loan books very aggressively. You know, if you look at the financial statements of a Nigerian bank, if you did a simple sum, you'd probably see quite muted growth year on year. What we have to take into account is that Amcon sales sort of artificially decrease the loan balance quite significantly. So whilst reported loan growth is perhaps 15-20%, the real loan growth is 30-40-50%, and clearly that is concerning for us analysing the Nigerian banks from the outside.
So where to from here? In a world where Amcon will ultimately stop purchasing these non-performing loans and hopefully be wound up. Well, many say, market commentators say that's the best move. You know, what will the banking sector look like without Amcon?
Well, I mean, I think the first important point to note is that Amcon will be around for a long time. Initially, they envisaged 10 years. Now I hear it's increased to 13 years.
So that will be up until 2023.
Exactly. Amcon will be on the landscape for a long time. You know, post-Amcon, certainly we would hope the banks would be in a far stronger position. Until then, the key question is, will Amcon be able to make the recoveries on the loans in order to pay back these bonds over various periods? Amcon funds itself through various sources, and if they're unsuccessful in their non-performing loan recovery, certainly there would be a bit of a question as to their ability to repay banks. That being said, the bonds are guaranteed by the government of Nigeria, so that probability is probably reduced.
Is there any indication of the ability to recover some of those bonds then, or loans rather?
I've seen some stats. There are views in the market that they overpaid. My view is perhaps they paid the right amount. The haircuts that the banks had to take on the sales were certainly quite severe. So recoveries that we've seen in the last 6 months, they seem to be fairly good, and they're certainly at a premium to what Amcon paid. So far so good. It seems like a positive message.
So what is your assessment then of the banking sector in Nigeria right now? If you could give a broad assessment, because it is still quite a saturated market. It is dominated by key players, the likes of First Bank, UBA, sitting at the top, but still there are many banks in Nigeria. And what are the biggest challenges right now?
Yeah, I mean, you're quite right. It is saturated, is a strong word, but it's certainly a highly competitive market, and there are a lot of banks chasing a relatively small pool of top corporate clients. So, you know, the key risks that they face, I suppose number one would be around their corporate governance and their oversight. Certainly that is one of the drivers of the crises in the past. If they can fix that and they can do lending that is what would the word be, satisfactory or strong, certainly they're in a much better position. That's
certainly moving towards IFRS, you know, reporting standards and all that would introduce that element of a lot better corporate governance.
Certainly. I mean, IFRS, I think they report from the end of this year according to those standards. From what I understand, the reported numbers shouldn't change that significantly, but clearly quality of disclosure will improve. I think what I picked up on my various trips is, on paper, their new policies, their risk management, their credit risk, they're world class. You know, they really present a very strong case. The question we must ask ourselves is, in application, will those policies be put into effect? And when you look at growth rates as high as they are, you become a little bit skeptical, but certainly much better
and
than it
also
was.
because they're now really going to be going after the retail market aggressively, and I suppose there's a lot more risk, and pricing that risk is an issue. If you could give us an outlook, a 5-year outlook on the banking sector, where do you think it's going to be in 5 years' time?
Firstly, addressing retail, I mean, that is, as you correctly say, quite a big fundamental change and a lot of risk there. They have not been active there at all. So I think First is leading the way, and we will see more of that. 5-year outlook, I mean, it's far too soon to call everything plain sailing, and we would need to see a lot more changes going forward. But certainly if you look at the demography of Nigeria, its potential, its growth rates, these banks are in a good position. And if they can address those lingering fears now, certainly in 5 years' time, I think we're looking at a very strong banking system.
And the banks that you would be investing in right now, if you had to pick a pool of, say, the 5 best banks, do any of them come from the second-tier space or third-tier space?
I think they're top banks in both tier 1 or 2. When you look at it from the outside, clearly there are certain ratios and certain policies you should look for, but you can find quality banks obviously in tier 1, but certainly in tier 2 as well.
Thank you so much for joining us. Ewan Gray joining us from RMB. Thank you so much.